We've got Gene Fang joining us as well. Gene, good morning. Thanks for being with us. Associate Managing Director, Sovereign Risk at Moody's, with the commentary coming in that Moody's has lowered India's GDP outlook. Gene, if I could request you to share with us some of the reasoning behind that, some of which, of course, is clear to see, but I'd love to hear it from you in terms of what the big concerns are with regards to the Indian economy going forward.
Sure. I mean, I think the update to the growth forecast is really driven by our assessment of the impact from this second wave. And the way we're looking at it is that the primary impact will be felt in the current quarter, and that hopefully things will be under control by June and we'll see a resumption in economic activity. I think we're also expecting the impact to be less severe in the second wave than compared to last year, given the fact that the lockdowns are being applied on a state-by-state basis with varying degrees of stringency. So there's still some degree of economic activity that's still continuing, and that makes it somewhat different from last year. But at the same time, given that this is in a way the second such shock in a year, particularly for consumers and small businesses, this might be an added burden, and we're therefore also expecting that the recovery, when it begins in the second, third, and fourth quarters of the years, will be somewhat muted compared to what we had previously expected in the older forecasts.
Okay. Gene, are there any particular pockets that you feel will be that are more vulnerable, or that you feel need to be looked at more closely? For example, on the financials front, we have had the RBI come out, share some measures of relief for small businesses, but other than that, as of now, there really hasn't been any other development. Some mild concerns with regards to a bigger financial impact there, but even in management commentary so far, we haven't really heard them alluding to that. Is that an area of concern at all?
Well, I think the financial sector has been a concern ever since we put this rating on outlook, on negative in June of 2020, and that's driven by the fact that there were pre-existing weaknesses in the financial system before COVID. I would say that the relief to small businesses has been very effective, or was very effective last year, and hopefully that will be effective this year as well in providing some buffer against the potential asset quality impact here. But I would say that it's also relatively early days, and we're continuing to monitor the financial sector very closely in terms of how the second wave will impact the system more broadly.
So do you think, Gene, then that these presumptions of some sort of a V-shaped economic recovery is definitely off the table now, given that we've seen a complete hold to our economic activity? And what would, change the outlook for India's rating to perhaps stable? Do you think that if we were to see policy actions by the government, higher, would the projections for growth increase then?
Well, it's hard for us to make any we don't make any sort of policy recommendations, and certainly in the field of public health, we don't have any expertise. But we do think that a more robust recovery compared to what we're currently expecting would be very supportive. I mean, for India, we're always very focused on the fiscal metrics, and this reassessment of growth is also going to lead to a higher overall debt burden. And I think that is one metric that we continue to focus on, not just for this year, but for the next 2 or 3 years. And we'd like to see that some of those fiscal metrics begin to stabilize, if not improve. And that would be certainly supportive of improvement in the outlook.
All right, Gene, we'll let you go on that note. Appreciate your time. Thanks very much for giving us an assessment as to what the outlook is on the Indian economy owing to the second wave of the pandemic, which seems to have ravaged the overall economic growth. And that, of course, is the reason for the lowering of GDP outlook.